Good morning. Welcome to Signal Centre's Talking Bull. I'm Steve O'Hare, and we've got another show coming along your way on this 5th of June 2023. So we're going to dive into a couple of news headlines, let you know what happened Friday or over the weekend, and then we're going to dive into some technicals. Please join in the chat. Ask me to look at different markets. I'll run through the normal markets we look at, but obviously have some time to dive into any requests, and then we can move into the part of the show where we can have a little bit of fun with the markets and do a little bit of a talking bull and see if we can pick a winning trade on the spot. So let me just get my news headlines up and roll away. So looking at the non-farm payrolls, obviously there's a strong increase on Friday, 339,000 for May, compared with expectations of close to 200,000. So almost over a 50% uptick in that, while the April increases were revised higher also to 294 from 253. Manufacturing payrolls declined 2,000 on the month, and there was a small decline in the information sector, while government jobs increased over 55,000 for the month. According to the household survey, the unemployment rate increased to 3.7% from 3.4, and above expectations of 3.5. The survey reported an unchanged participation rate with a decline of over 300,000 in the number of employed. Average hourly earnings increased 0.3 on the month, with the annual increase slowing slightly to 4.3 from 4.4 after a small downward revision for April. The Fed should now be in a blackout period ahead of the June the 14th policy decision, but markets will remain alert on for any unofficial briefing about the through the Wall Street Journal. The situation will be complicated by the fact that the latest consumer prices inflation data will be released on June the 13th, which could have an important impact on the decision. Following US data, there was only a limited change in Fed funds rate expectations, with futures markets indicating a 26% chance of a June rate hike and over a 60% chance of a rate hike for July. Higher US yields were important in underpinning the dollar, and US currency posted net gains against major currencies. OPEC Plus announced that the current production cap would be extended to the end of 2024, while Saudi Arabia announced that the July output will be cut to 9 million barrels per day from 10 million barrels per day. Latest US ISM non-manufacturing will be released on Monday. Consensus today, that is, consensus forecasts offer an increase in the headline figure to 52.6. The Reserve Bank of Australia also policy decision will be announced later on Tuesday morning UK time. Consensus forecasts offer the bank to keep interest rates on hold at 3.85%. Forward guidance will be important for the Australian markets, no doubt. So good morning all. Joe's not with me this morning, so I'm going to go run through the headlines, give you a little bit of a view of what I see, and hopefully we can, as I say, give you some sort of like overview of what we think the markets will be doing today. Let me just make myself a little bit smaller. You don't need to see me. The markets are far more important. Bitcoin, we'll start with cryptocurrency. Take a look at the three we normally look at: Bitcoin, Ethereum, XRP. Any others you want me to look at, let me know. We've got a couple of different moves playing out at the moment. We've got this inverse head and shoulders formation, which has been on the weekly chart. So definitely one for the longer term traders amongst you. We had the break through the neckline. The measured move target for the break higher from this basing pattern was a move to 35,061. We stalled at 31,000, so only got really just over halfway there before pullback. We actually only pulled back to the neckline, so the neckline is quite a key level in my eyes. 25,400, bullish above there in the short term, and bearish below there. If we do manage to break below there, I'll be bearish. And overall, the longer term picture doesn't look very good. We're really struggling to get above this level of resistance, which has formed based on previous levels of support, and that now turned into resistance. That ranges from around about the 29,000 to the 32,500 level. So that's done a good job on resisting so far. But the weekly chart still looks slightly threatening to the upside. The daily chart actually paints a slightly different picture. We've got this topping formation on a daily chart. Again, head and shoulders formation. We had a neckline which was upward sloping. We managed to sort of break down below this, so that confirmed the formation on the daily chart. We have pulled back into the resistance and challenged that neckline, and price action is below it at the moment. So really, on a, as I say, on a short-term basis, you're looking at this 25,800 level, which is supported the market on a couple of occasions. And again, looking at just this on its own, that sort of like threatens a double top formation, but that failed quite quickly, 3 days, and it was done. You can see the MACD turning over to the downside, so be aware of that. Looks like we're going to get that momentum slowing down, maybe pushing into negative territory after we've topped out at 28,452 and started to move lower again. So a very key week, I think, for cryptocurrency this week. Obviously, the strong dollar that we've seen from Friday's non-farm payrolls does impact on this. A stronger dollar currency, because it's priced in dollars, will send these markets lower. The daily chart on Ethereum is pretty similar. We've had this topping formation, or this rounding formation here, and then we've had this projected period of sideways price action. Resistance coming in around about the 1930 level, and support currently around at 1843. For me, the major support is below at 1730, around about. We did sort of like have a little revisit to this on the 12th of May. But if you go back historically, you can see 1730 has done quite a decent job on multiple occasions. So for me, that's the main area of support, a little bit in line with probably Bitcoin support around about the 20,000 level. XRP is a little bit of a different story. This is the one that has on a shorter term, on the daily chart, is actually looking positive rather than the other two markets, and we have broken higher. We've actually had an inverse head and shoulders formation. The measured move target for this was a move to 55 cents, and we stalled just in front of there, got up to 54.66. So not a bad effort in terms of technical formations. Did pretty well, and yeah, played out very close to the measured move target of there. Price action on Sunday night was pretty good, and we pushed higher into that measured move target. Next resistance up at 58.5 cents, so that's the one to watch. And below, we've had support coming in at 50 cents. They're the two levels to really watch. This 55 and 58 on the upside. XRP looking quite promising. Morning all, morning Marsh, morning Sanadid. We're going to take a look at gold as well, Igwe, and I'm going to take a look at the commodities now, actually, in fact. So let's dive into gold. We had a gun to head trade idea in this on had it on Friday. Yes, I think I did it on Friday of non-farm payroll, looking for that dollar strength to lead to gold weakness, and it really played out nicely. So I'll show you that later on in the show. But let's take a look. Let's start with a weekly chart on gold, and we can see that we've got these three levels. Let's make sure we get this the right color. This is negative. So all-time highs up at 2,075. We stalled in front of that at 2,070 in March 22. And we've also stalled in front of that again. So posted a lower high, 2,067. That was on the 1st of May. Since then, we've had a similar sort of reaction as we've had before. We sort of like had this breakdown. Then prices seem to sort of hold for a little while, then have a further breakdown. Are we going to see the same thing again? It does look like slightly cyclical, this, but there's no real sort of like rhyme or reason for it. But really, the dollar strength after a prolonged bout of dollar weakness has sort of like led to this market moving lower. We got down to around about the 1933 3 level last week. That was on, here we'll show you here. That was sort of like at the start of the week, had the rally higher all the way up to Thursday, and you can see the bearish outside candle from Friday's price action. The dollar strength absolutely pounding gold, and bringing the support levels back into focus. Now, so for me, 1930 to 35 area, specifically, I suppose 1932, which is last week's swing low, is important this week. It looks like we're under pressure again this morning, so I would expect a retest. We can see if I bring dollar index out now, you can see the rebound that this had, and it's still continuing higher this morning. So I would expect dollar maybe to retest this 161.8 fib extension level, which we had from the last Wednesday. We got all the way up to 104.70 on the dollar index, trading at 104.30 at the moment. So wouldn't be surprised if we do get back up and retest that. And in the same way, we should expect a bit of a retest of that 1930 to 35 level in gold. So if we do manage to break below that level, I would expect a further extension, maybe a slightly accelerated move lower. Next levels of support for me would be a psychological support at 1900, and the main support all the way down at 1805. And you can see sort of, if you look at price action, when we broke that 1860 area of resistance, it was quite a quick move all the way up to this 1935 support level. So I think in between there, we could have some sort of vacuum move, really sort of like prolonged, quite sort of sharp retracement from these highs after posting that lower high that we talked about. That's gold. We're going to take Barter. We'll take a look at S&Ps as well later on. So let's just dive into another commodity, which is quite key, and that's had a bit of a move this morning, obviously, on the back of that Saudi news that they're going to extend the OPEC Plus nations are extending the output cut. Saudi also cutting production down to 9 million barrels from 10 million barrels. So this has led to a spike higher into the morning session on Monday. So we've got a bit of a gap on the charts. Looking straight at this on this chart, let's take a look at the weekly chart just to sort of like give you an overview of where we are. Obviously, we had the rally higher March last year. We got all the way up to $126. We've had the impulsive move lower in a nice sort of like, almost like, I mean, we've got the Elliott wave on here. Let me just get rid of that. But this is a nice impulsive move down. We're basing out here. We've got this, historically, we seem to have a bit of a pivotal level around about that $66 level. From a weekly perspective, we have posted potentially a double bottom. There was a bit of a low sort of high volatility, low volume spike lower around the 1st of May. That sort of like stalled around about previous support, and we've got a potential for a double bottom to play out, but we still got to get up to that $83 level. But I think this move by the Saudis could, let me just get rid of that. You can see how we spiked lower last week and then got the rally into the weekend, and then obviously overnight we've had the spike. You can see Wednesday's price action last week. Actually, we had the oil inventories out, and then we had the bullish engulfing candle, projected higher Thursday, and we've opened up higher over the weekend into Monday's price action. Resistance coming in around about at 61.8, around about the 74.60 level. That's the one to watch on the upside. We've stalled on the open after the gap higher, and we're pulling back at the moment. We'd expect support coming in around about, well, the reverse trend line has already sort of like been hit, but there is a gap lower to 72.17 on this chart. So it's only a 10-cent difference. But you know, maybe there is still a gap there, so there's still a little pressure. Fill the gap and then retest this 74.60 level. On the downside, next real level of support is last week's low, around about $67, and after that, as I say, all the way down at 64.30. So that's WTI crude oil. Quick look at natural gas. That's been under pressure, and Friday's price action was slightly more positive, bit of an inverted hammer inside the price action from Thursday, and a little bit of a spike higher as well on this morning's price action. So that looks like it's potentially posting a higher low. So that's slightly positive for natural gas also. So we'll take a quick run through Forex FX. Really, again, focusing on that dollar index, as we said, we've bounced from 103.40 support. Now we're looking to target that 104.70 resistance again. Really good extension higher this morning. So the dollar strength continuing into Monday, and that definitely be a driver of market price action this week. So obviously that impacts on euro dollar negatively. On here we've got this the head and shoulders formation or double top formation that we had played out really nicely to the downside. Now price action from last week posted a bit of a bullish hammer Wednesday. That was interesting, and it sort of closed to the downside. We had the next day we had a little bit of a spike lower, retest of that support from Wednesday, and then the extension higher. So really strong candle on Thursday, but we've given up most of the gains by Friday night close, and we've extended lower. So we've engulfed that positive price action from last week. So euro dollar looking on the back foot, and you can see sort of from previous price action, really the 105.20, 105.20 to 105.30 area of support could potentially be one to watch moving forward. Resistance really, I would expect at Friday's high, 107.80. If we manage to get back up above there, then dollars turning weaker. Cable, looking at that on the daily chart, price action positive last week until the non-farm payrolls on Friday, and again we gave up most of Thursday's gains then, and we have extended lower than Thursday's low also now. So on the back foot this morning, and cable looking negative. Levels to watch here, 125.50. That's the resistance that we've got in play at the moment, and we've got support down at 123.44 and 123.08, which was the low from Thursday the 25th of May. Yeah, overall that looks like we're at the sort of like had that top of the channel. We could be forming a bit of a head and shoulders formation here. The neckline would be slightly downward sloping, a little bit more difficult to trade and get some good risk reward out of, but that's what we're seeing. Looking at a couple more, let's have a look at dollar CAD. This is obviously impacted by some oil price action, and we've got the trading within a range really, 136.70 all the way down to 133, and we're about middle of that range at the moment, or slightly below. We've got support coming in at 134.10 this morning. Really nice extension lower, and you see with dollars, the dollar strength, this is sort of like bucking the trend slightly. You sort of see dollar weakness against Canadian dollar, and that would have a lot to do with oil. So coming in there, 134.05 to 134.10 support. So watch that one. That could be interesting. The dollar Swiss showing off the dollar strength. Nice bullish channel we're in at the moment, and no sign of that really slowing down. Nice little touch points on top and at the bottom, and extending higher, looking at targeting a move to 91.71 should this channel continue, and pretty bullish on the momentum side of things as well on the MACD. So nice to see there. We've got no other requests for FX. I'm going to dive into indices, and we've got a request for S&P, which I'm going to dive straight into, take a look. So interesting, obviously Friday for me, it really did sort of like, you saw a real turnaround in fortunes for indices, which for me were looking not so clever. They were looking like they could be putting in a bit of a top, maybe all of them apart from Nasdaq. But the S&P, we've got this downward trending channel, which price action has really respected at the moment. We've retested the reverse trend line of the top of the channel on multiple occasions, the weeks of the 24th of April and the 1st of May. And prices have reacted higher from there. We've taken out resistance now at 41.88 and over the last few weeks, and extending higher. So overall, can't say anything other than it does look pretty decent. We are approaching the 61.8% Fibonacci retracement level. This will be the key level to watch for me this week. It's at 4,307, and you can also line up with this August the 15th week swing high that came in at 4,325. That's the highest we've seen in this downward move after we had the rally up from June last year. August 22, that's the highs we're looking to challenge, and probably expect a retest of that this week. And there's a bit of a confluence of resistance areas. One's a Fibonacci, one's a horizontal resistance level. So that should be interesting, and I would expect that to be targeted this week, and we'll see how we get on there. On the daily chart, we had let me just redraw that. Got a nice bit of support coming in with multiple touch points on this upward trending support line. We've breached it on a couple of occasions, but only briefly during the day. There's been no close below this, and looking pretty strong at the moment. That shows me that support comes in around about the 4,190 level. That would be like a decent dip buying with the trend. And again, we could see that swing high that we got from 16th of August up at 4,325. That looks to be the target level, and I would expect a challenge of that over the next day or so. Hope that helps on the S&P. The Nasdaq is, as I say, has been pretty impressive overall. It's actually taken out that 61.8% fib retracement, so you can see that the Nasdaq is leading the way in terms of the US indices at the moment. Next level of resistance just shy of the 78.6 fib retracement. So looking at 15,273 to 15,414, that sort of area as a potential next target to challenge on the upside. Still a long way to go. We're only at 14,500, but you can see over the last 3-4 weeks, very strong price action after we broke that resistance around about the 13,200. And I think I was reading a few stories about how there's a lot of people underweight on this tech sector, and we're seeing maybe the late runners coming in to recapture that part of the portfolio potentially. So a break up through here and a little bit more on the upside, I think, before we can question whether this has gone too far. And Dow Jones, we've got downward trending resistance, but you can see Friday's bullish engulfing candle. So we're looking to challenge that downward trending resistance. The actual resistance comes in at 33,870 today. And then above that, we'll have multiple horizontal resistance levels to challenge. 34,283. These are all sort of like swing highs from important days. 34,524 and 34,954. So plenty of resistance up above and looking pretty impressive to start the week. US 30 or Dow Jones 30 looking okay. The one we do like to take a look at on the European side of things, it's a great market for that volatility, if that's what you're looking for, is the Germany 40 or the DAX. Now we saw price action last week was pretty mixed. We had a sell-off into Wednesday. So Wednesday night we were challenging this support level, which was previous resistance, then turned into support. We looked like we were breaking it Wednesday, but we actually closed bang on it. We had a bit of an area of support, so a couple of levels, a bit of a channel. But then Thursday's price action reversed most of Wednesday's losses. And then we had the extension higher on Friday with this good news from the US on the employment situation. We've extended higher again this morning, traded up to 16,115, just trading around there at the moment. So looking quite positive. On the 4-hour chart, we've broken above the Ichimoku cloud, the downward trending resistance that we had. We can see here, broke above that early on Friday morning and extended higher through the cloud. And now the top of the cloud, providing a decent bit of support around about the 16,027 level. So that looks pretty positive. EU50, one of my favorite markets to trade, and similar sort of price action here. We've broken through that downward trending resistance line and we're breaking through the cloud. So all pretty positive on the indices side of things this morning. Take a quick look at FTSE. That's going to benefit from that strong dollar as well. Level to watch here, potentially. Yeah, like this. This is the multiple high point. 1, 2, 3, 4 occasions we failed to break that 76.63, and we're trading just below at the moment. Again, would expect a little bit of selling to come in at this point, and then we'll see how we get on. But that's the key level to watch on the short-term chart. Looking like we're forming a bit of a base here. Is potentially left shoulder, neckline, head, right shoulder, and then neckline, then right shoulder, and then move higher. So something that we could watch on the short-term charts, looking at support coming in at around about 75.60 level. So that's the indices. Let's move on. We've got the gun to head challenge. If I took that banner off for a second, you can see gun to head challenge. This is where myself and Joe pick a trade idea and place it live on the show, and then we need to sort of have a little bit of a criteria around this trade idea. We need to place a stop and target with a risk reward ratio of 2 to 1 or better. Trades will close at just before 9 p.m. We've set it automatically so we don't forget, unless they obviously hit the stop or the target, and we risk 1% of capital. So let me see if, yeah, let me just bring up the where are we? I'll just try and bring up the actual what we did on Friday. And we can show Joe was Joe selling EU50. I'm trying to think if this was on the right day or not. No, this might have been the next day. I'm not sure whether we got the actual. No, they weren't posted on Friday. Apologies for that. But I'll show you what we did do Friday from the transaction history. We look into here. We had sterling Swiss. Joe went short of sterling Swiss, but unfortunately was stopped out. You can see the loss of 1982. I went short of gold, and after the rally and after the failure of my trade prior to that, on the June the 1st, I went short and got stopped out. On Friday, I went short and hit the profit. So you can see when the 2 to 1 risk reward ratio really plays out. So effectively, I think it was on Wednesday or June the 1st, whatever day that was. That was probably the Thursday. I went short of it, got stopped out, lost around about $20. And Friday went short of it and hit target. 2 to 1 risk reward. I made $40. So won 1, lost 1, profit £20. That's the idea. Just teaching you sort of like good methods for trading, really. So please sort of like think about that when you are placing your trades, and have that risk reward skewed in your favor, because the markets are basically against us. So you've got to sort of like try and have some sort of methodology for improving your chances of success. So again, there's a couple of trades I Let me take a look. I'm sort of, when you're sort of hosting the show and you haven't got like time to think in between, where Joe usually does the FX and I usually have a little move around the charts and really look for opportunities to sort of like to see. Basically, I run through this. I have my 4 time frames, my hourly, my 4 hourly, my daily, my weekly. Weekly, obviously, the one that's really overall driving the market, and the hourly time frames. I have the cloud on both the hourly and the 4 hourly, and I like to put a trade idea on when both of them are the same way. So if both the hourly and the 4 hourly are above the cloud, I like to be buying it. Below the cloud, I like to be selling it. So that's what I look at most of the time. The Ichimoku cloud is just a really quick snapshot of the short-term trend. Obviously, gold is one to watch. This was my gold trade that you saw. That's where it hit the target just before the close. So quite pleased with that one. Nice extension lower. Could have had the stop a little bit tighter actually, and that would have amplified the risk reward, but you roll with it. And we're below the Ichimoku cloud, obviously, on that 4-hour chart. So I actually put that trade on when it was above, and I did say on the show it's a little bit against what I want to do, but there was this downward trending resistance line which I quite liked and was hoping for that to hold. So that played out really nicely. Again, what do I think today? Potentially, probably extending lower into this level here if we do get that more dollar strength, which I don't see a reason why we wouldn't. So that's one of my trades to watch. On the oil side of things, we've had that extension higher. We're above it on the 4-hour chart, above the cloud, looking quite positive. And yeah, maybe as the markets wake up over the next sort of few hours, we'll see that extending higher also. And also the S&P looks pretty decent. Are we going to see a further extension today? I don't see why not either. So bit of a quandary, but I think overall, as we're so close to the support in gold, I might look at indices instead. So as someone requested S&P, let's try and take a look, Bartle, for what trade I really would look at. Now we have extended higher than I quite like to look to buy dips back into support, but with a gun to my head, I've got no real choice here. But what I can sort of potentially see, we had this rally higher, had this little bit of a stall, rally higher again, and again we're looking at maybe a potential bullish flag formation, something like that. So can we get a trade idea on? We'll be looking to get in around there. Maybe the stop below has to be sort of like a bit closer than that because we want to get some decent risk reward on the upside. Something like this wouldn't be too bad. I like to look really for about 2.2 to 1. It seems to be one of my an averages. The stop is pretty close, to be honest. It's not looking great. And if it is a flag, then we should expect the extension higher to be pretty decent as well. That's the sort of target you could be looking at. So on that basis, I can actually move my stop lower. I mean, it's a bit easier putting it in. Somewhere around about that 2.1 to 1. Again, stops maybe we can bring that in, make it a bit easier. There we go. What about that? That feels a bit better. So I'm going to put the trade on there, create a new order. I'm going to buy at market, stop and target, risking 1%. As you can see, it's £19.74. And the target up at 4 30, 2.24 to 1. So I'll go, just risking just a bit more. So there, get that trade on. Yeah, it's only risking £18.10 because we've got a small account. It doesn't actually give you, you don't always get on exactly what you want to do, but we try and keep the risk under 1% if we have to, rather than over 1%. So yeah, getting long there. Stop is at 42.63, target at 43.30. Long, looking for that extension higher after this bit of consolidation that we saw overnight, really, since we opened last night, Sunday night, in the markets. So looking for an extension higher in S&P. Hope that helps. That gives you an idea of what I look at anyway. So let's move on to what we're expecting in the markets. US ISM non-manufacturing index coming out at 3 o'clock today, and overnight we should see the Reserve Bank of Australia's policy decision expected to be unchanged. This week, events for this week: Bank of Canada policy decision and Canadian employment report. They're two events to look out for, June the 7th and June the 9th. So yeah, that's where we are on that. And yeah, hope that's been informative. Hope you enjoyed it. Thanks for joining me, and look forward to catching up again tomorrow. Cheers.